This is the profit and loss statement as of now. I'm trading with my lowest leverage, and at this point, we expect, like I said, the price is taking support at the new week opening gap. Now the thing is, this liquidity, these highs, they look very clear. Okay, they look very clear. The fact that the price is not pushing lower too hard, I mean, it should have gone down at this point, at any given point, but it's not doing so. Hence, I'm going to stick to this move. Okay, I'm going to stick to this move. I'm going to add one more lot once the prices test this level. This level is 21,869. Okay, so 21,869 is right here. So I'm going to add one more position right there, just like that. Okay, so I'm trading with my lowest leverage today. So we got in once again. I don't want to see the price stay out of this bearish fair value gap. I want to see this take support, push up, okay, then act as an inversion fair value gap. That is where I can think of adding more trades, more positions. And then once we break out of this high, I will take out, what do you say? I'll take out my first partial. At this point, my stop loss is going to be uh, probably below these lows right here. But I'm also looking at how the price behaves around this area. That's an important understanding for us. So this is a void where I have added a position. So I'm going to take out my first partial here, but I'll add more positions if the price can sustain this fair value gap. Okay. Now my stop loss is going to be, you see this fair value gap, this candle right here. So this is going to be my stop loss. So I'll change this color to red so that you know where I am trading my stop loss, right below this candle. Okay. This is my stop loss. I would like to see this stay open. If we can stay open here, that is good. But even if we come down and push up, that's fine. But this is the last area. I'm going to take a stop loss right there. Not going to do anything else. You see, I did take a trade in the put side as well. Now that's called testing the waters. We are trying to test if the prices can really go down or not. You need to get in sync with the market. There's a lot that you need to understand while we are taking real positions. So here I want to see this act as an inverse. So this is a bearish fair value gap for a lot of people. I want to see this act as an inversion fair value gap. Okay. So I would like to see this go up, probably dip back down once again so that I can add one more position. This was the level I executed. Another partial. I added another position. So you need to understand these things that there's a lot you have to work on executions. I'm going to see how this plays out. I would like to see this, see the price stay out of this. That's going to be a good sign. Now, if you look at the 15-minute time frame, there is a volume imbalance right here. Okay, yes, there is a volume imbalance right here. Now, only if the price comes back down to test that BI, we can be in trouble, or else we can expect very clear high prices to like take out this high very clearly. So I would like to see that. So inversion fair value gap, I'm waiting for the price to act as support there. I will take my first partial here. That's going to be at least one lot is fine at this point. I want to see this act as support. So if the price dips down once again here, I will add another position. As I said, yes, I'm trading with my lowest leverage today. It's important to understand that taking trades every single day on your highest leverage is not going to be a good, uh, good scenario for you. You need to understand when to step back and when to go all in. So I had gone all in last week at some point. We avoided two trades, two good days, two bad days. That was nice. Now we're trying to see if the market is bringing back the momentum or not. So I'll take out my first partial right here and I'll trail my stop loss to this, just below this point. Okay. I can do that even right now. So I just keep it right here. This is going to be my exit. Sorry, I've trailed my stop loss right here. I'm expecting the price to first take out this high. Once we take this out, I will take out another trade somewhere. Let me just check what's happening on the. So this is the 30-second time frame, and this can yep, I can exit my partial right here at this area also. 21902. 21902 looks good to me. Ooh, sorry. 21902. So 21902 is right here. So 21902, I'd like to take that first partial out. Let's see if we can get another trade in as soon as we touch the fair value gap. So I'm expecting this to act as an inversion fair value gap. Let me check if there is a better entry for me to get in somewhere. Everything is filled up. This looks good. 21881 looks good. 21881 is right here. So I don't really have anything. So a test of inversion fair value gap somewhere here. I'm going to take that execution. Going to add another position right here because I've traded my stop loss. So that gives me a better from here till here. All right. So I'm going to get in once again in just a bit. All right. So I will add another one. And now from 150, I have 250 in positions. Okay. Now, if we do not push up from here, I'm going to take all of my trade out right below this void. Okay, there's no reason for the price to come here. If it comes back down, it can take out these equal lows very easily, and I don't want to see that. Okay. Obviously, if I get an opportunity to get book one partial, that's going to be right here now. Okay, because I am heavy into this, heavy as in terms of the leverage that you are taking. Okay, imagine this being a 20,000, 25,000. So what are you supposed to do? You're supposed to be careful about booking your partials every single time. Even this high is good. You can book your partials here. We'll see if we can catch momentum. I'll be happy to book partials above that high. If not, I will be careful about what I'm doing. I would like to see another spike. I'll book one partial. Now I'm left with 200 quantities. Now this I'll take out right here. I would only take out just one. I will take out two right here so that I'm left with 100 there. And I can then trade the remaining for the whole, for this entire. Okay. So it was important for me to book that partial. That's good. We again enter. See, I'm trying to enter trades whenever there's a down move, not whenever there's an up move. Okay. So inversion FPG, we entered this void right here. Everything looks good to me in terms of where we are heading. So I would like to see the price now. Should have take out this high. So on the 5 minute time frame, if you see we have a volume imbalance. If we can fill that up and push, that is even better. But these moves, I'm not, and if we can just keep this open, then I'm very sure that we'll take out this high at least. Okay. So next partial, I'm going to take out right above this high. That's going to be 100 quantities. We didn't really get good prices to exit. If you see around 69, then we have 74. So it's like 4 points, 5 points partials. But that's okay because we are anyway not going to give a stop loss of more than 10 points or 15 points. So I'm just waiting for this to spike. If we can spike right from here, that's going to be a good sign. Right from this VI. So we tested that VI. So my trailing SL is still right here. Okay. This is going to be my partial. This is a 5 minute volume imbalance. I would like to see the price like from here, it should rip up very strongly, very strong up move. If we can keep this open, it's going to be even good for us. But if it starts filling that up, then I will have to rethink this, that the markets are definitely not doing something that we would like. Okay, so standard deviation 2 is here. If we can keep this gap open, this fair value gap open, I will exit my second move here. 100 quantities right here, 21,900. Or else I will leave it. Yep, 21,900 is what I will expect. But to see that, I need to see this open. It's very important for us to see this stay open. This fair value gap stay open. So if you look at this is clearly turning around to be an up move. Then we have only have these equal hands right here. I'm left with 200 quantities. This is inversion fair value gap. I'm not going to add anything here because we already took out the sell side now. I'll just keep this open. This 5 minute fair value gap that you saw right here, I would like to see that stay open as well. So I'm just going to draw these lines. Okay. So that's a 5 minute fair value gap. Stay open as in price can test it, but I don't want to see it fill completely. Now, the fact that if it fills completely once again and it's not pushing above the inversion fair value gap, I will collapse my trade. Okay, so I would like to see the price push down. If it's taking place, it should reverse, like it should repel right away. It should not do the starts acting as resistance. I'm going to cut that trade right away. If it can keep this open, I'm very glad I'll be seeing this here. Okay, so that's what the expectation is. Let's see. Right, so as you can see, it's coming down. We haven't filled it yet, so still okay. Like it doesn't look good. These lows, it should spike up right away. I want to see some momentum now to take out this high and this high. That's extremely important. If that's not happening, then I will reconsider my decision to stay in this trade. I want to see this act as support here. should definitely act as support if it wants to go up. 21,900. If we do keep this open, I'm going to exit those two trades right here. Now, see, someone who is trading synthetic futures will have an advantage. They are probably not seeing decay. They're probably not facing a lot of. So still pushing up, but I would like to see this take. I would like to see this. That's very important. 21,900. I'll take out two lots without any hesitation. So that means at this point we are at 75. If we can get to 80 or 85, right? Let's see. Whatever the option premium gives us. This is the problem while you're doing option buying. But if you are into futures or synthetic futures, it is going to be easy for you to understand how many points you can manage. You can do a lot of things accordingly. So I really like the fact that this fair value gap is open. If you see this fair value gap is not filled yet, I would like to see the price continue to stay above it, and there can be some quick momentum at any given point. Now, by quick, I mean like very quick, very huge candlesticks to take out this high. So 21,930 is going to be a very major objective for me, and I'll be glad to see that. But I don't know why do we have a decay here. So okay, this was the reason. Now I still don't want to see this fill. We have a fair value gap. Let's see if we can support this, if the price can support this 1 minute fair value gap and push up, that's going to be good. So just waiting. If we fill this and then I'm unable to see the price go above this IFVG, I will reconsider my decision to stay in this trade. Okay. But if we continue to stay inside this, then the draw on liquidity is going to be very obvious here. And I will stick to that then. Definitely, in the pre-analysis, I've mentioned that we should be looking for lower prices. But guys, for people who know what concepts we follow, they should be aware that this area is extremely important for us to see higher price. Sorry, this area is extremely important for the price to stay below this and then push lower. If that's not taking place, obviously the prices are going to take out these highs. And this is real time. This is 1/6. You see here. I don't know where to see the time. Here. Okay, I can show it to you in my system. That's 1/6, 1st of January 2024. So you see the time matches here. Okay. So everything that I'm talking about is actually a part of order flow. When I say that I want to see this stay open, that helps me understand that there is going to be momentum in the market. And when the market does that, I understand it very quickly and I take a decision accordingly. But if the price comes right inside this and then goes back in this inversion fair value gap, at that point I'm too sure that okay, fine, it's not trying to go out of this and it's probably going to fail. So that is the moment I will ensure that I'm not in that trade. So I do not like this. I do not like the fact the price is doing this multiple times. It feels like it's contracting to spike up, but I don't like the way it's behaving here. So took out this high once again, and there should have been one partial there, but fine. Because we were expecting a spike. Now we are back here. This VI should once again act as support, or we'll have a tough time to see higher prices. I really like the way the prices are taking support at IFEG. So if you see every dip down here at this IFEG, there's a way the price is taking orders and pushing up. So it's actually um an institutional order flow entry drill, which is down by ICT. And I would like to see the price test this once again and push up, but keep this open. I really want to see this stay open. The high of this inversion fair value gap can be tested multiple times. That's fine. But I don't want to see this stay open. If this actually spikes from here using IOFUD, we will see a very strong run higher to take out this high right here. That is 1,900, sorry, 21,930, and obviously the previous day high, Friday's high as well. So I am expecting the price to do this. Hence, my last two lots are probably going to be exiting here. So if we see a move higher, I'm going to exit one here, and one here. That way I will be able to exit. Yeah, so I'll exit two here, and one. This IFBG should act as support here, especially the high of the IFBG. That's extremely important. If that's not taking place, it will be risky. And my trailing stop loss still stays right here. Okay. So we're trusting the IFEG and going to stay in this trade. As I said, I do not like the way it's trying to go in every single time. So I'll be cautious. If we fill this completely, okay, I'll be cautious. If we fill this completely, I'll be cautious. But if we keep this open, I'll be okay with it. I'll be okay with whatever the prices are doing today because it turns out that this is not where on the weekly time frame I'm expecting the price to go, and hence the reason we are seeing this amount of uh, resistance. We still have this open, but I want to see this candle spike. I really want to see these candles spike up. The 5 minute time frame, look how nicely the closings are. The closing are right above this IFPC. Okay. Now, this trade will only go incorrect when the next candle shoots down like this. But if we are correct, we can assume that every level here is going to be a partial for us. The fair value gap that we had open is still open. There's no problem in that. That's perfect. I love that. A lot of people would be waiting there for an entry, but we've entered somewhere here itself, and we are assuming that now that FPG will stay open. Once we keep that open, I would like to see it run. So I'm doing these videos for my mentees. It's not for YouTube. Okay, YouTube. It's not for YouTube. It's only for the mentees. But I'll try to upload this on YouTube as well. These videos are just for mentees. And I'll probably try to do more of it, but I'm not sure because I won't be trading with my lowest leverage every single time. So I want to see the price take out this high and then reach for this 21,900 as the first standard deviation that we had discussed. That's important. Okay. See, this is something I don't like. When the price starts doing these things, they're into a high resistance condition and I don't like it. But yes, when the spike starts taking place, I'm sure that we'll get some good exits. Now, if you see, if we can take out our first partial here, sorry, second partial here, we then I'll trail my stop loss and I'll definitely tell you where it is supposed to be. So I'm keeping in mind the next balance price ranges and the next imbalances. Wow, why is this not? Well, the next balance price ranges and the next imbalances to trail my stop loss. So if this is a breakaway gap for people who know how we treat breakaway gap, we'll use that as an area to keep our stop loss. Still expecting a spike that could be very strong, to be honest, like a spike that could just take out all of these highs. This right away. All right. So I'm waiting for that. So 21,900 is going to be my partial. I can do one here and one here as well. So let's see. I'm not trading my stop loss yet. I need that exit. It's not there yet. So we'll have to wait. Again, I don't like this. I really don't like this. The way the prices are behaving here, it's too annoying. I want to see a bigger spike. Okay, we traded through this opening price. That means I can treat this as a bullish order block somewhere. But the price really needs to like now catch momentum. Really needs to start catching momentum now. Okay, now my stop loss gets straight right here. Okay, at least I will save this if the price turns around on me. Even something I don't like. As I said, the prices should have spiked up, but it's a high resistance condition here. It's taking its own time. So I'll be careful now. I will exit both the partials here. I'll be very careful here. It makes no sense for me to try that extra edge here. Okay, so it won't make any sense. So I'm not going for that extra 10 to 13 points on futures. Let's just see if there is momentum, I can go for it. But you see, there's a volume imbalance right here. That's an imbalance. If this was any other normal day, definitely this was an easy move. But again, the way the prices are acting here, you know that you cannot trade this more than once or twice. These days are not tradable more than once or twice. Now my stop loss has been traded here. Now if the price shoots down, it will take away my it will take away my stop loss here. Again, this is a contraction. This is where the markets are contracting a little bit before an expansion. So we're just waiting for that expansion. However, unfortunately, I do not like the way the prices are pushing here. So I'm going to exit one more. I don't care what the price does. Okay. I have exited one more. I am only left with 150 now. We'll see if the price can go in our favor. I have trailed my stop loss right here. We couldn't get that one partial we were looking for, but there was nothing we could do about. It just got disconnected somehow. The recording stopped, but we're still into that trade. And as I said, I've taken that one partial. I'm not doing anything else here. It's all good until we take out our trailing stop loss. It's all good. And I've got that 150 left. So I'm going to take away that one lot right here, the other here, and the last one here. I'll probably see if I can hold the last two to take out these highs. But the way every time the prices are turning around after two after those highs, high hunting and everything. But yeah, these are like this is called volatility contraction pattern. It's like a VCP where I mentioned VCP in my YouTube videos. Okay, it's not something that is a smart money concept, but it is useful for us to understand that there is going to be momentum. My trailing stop loss has been placed perfectly, and there's no reason for the price to come there. For the price to come there, it has to go below the 5-minute VI, the inversion fair value gap high, the fair value gap, and the 50% of this range, and yes, a lot of things. Okay, so it's placed perfectly. I'm not expecting the price to go there. We are careful about seeing the price. Like I want to see it take, it should take support somewhere and then start pushing up. It's not frustrating, but it's just that we are trading into the worst market conditions possible, and this is the reason you see the quantities are low right here. But if you check what I did on Wednesday, the quantities were way too high. High because the markets were doing what we were expecting it to do. But here in this case, there's no such expectation. Yeah. So this is probably not going to be a successful trade. However, I'll just wait. I'll just wait. This may not turn out to be a successful trade, but we'll just wait to see. Yeah, we have a fair value gap right here, but if the price resists this, okay, if the price resists this, it's going to give us a tough time. It's going to give us a tough time. So if the price goes right above this, I'll be okay to like stay in this move, take support, and then even push higher. So this is a good expectation, 940. I'll probably, if we can exit 940, we will exit all of the trades at 940 here. 940 on a gift. You may probably think that we have a lot of so that was gift Nifty. Here we are at Nifty futures. All right, still waiting for the spike. So I asked my mentees to Not. So I asked one of my mentee, he pinged me personally that should we expect the highs here? Definitely. The highs can be taken out, but is this a market condition they can manage their trade? Not. They cannot manage their trade in such market conditions. They probably don't even know where to put the stop loss. They probably have the stop loss right here. So once they go through this video, they will realize how bad it would be if they were stuck somewhere here trying to take a trade. This could be very bad for them. Okay. But if you see, it doesn't matter even if it takes out a stop loss. Whatever we are supposed to get here, that's going to be it's more than the risk that is involved at this point in this trade. Okay. Because if they probably have a quantity, let's say they have entered with it, and probably they are trading with their highest leverage. They do not have control over their emotions. And that's where things are going to be a little tough for them, for anybody to manage their trades. That's what we don't want, right? So we want them to stay in conditions, in market conditions, trade in market conditions where it's easier for them to stay in a trade. So this is a 5 minute VI. Okay. Now we have another volume imbalance. Again, if we can keep this open, I am going to definitely, oops, sorry, we can keep this open. I would like that. Would like that very much. So this is a 5 minute VI. This, sorry, this is a 5 minute VI, almost like should be a VI. Yeah. So if we can keep that open, it's going to be a good sign. I've got 150 quantities with me. I will exit one as we touch 21,900. That's like 1 point away. That's it. All right, so I'll just sell this. Now I'm left with 100 quantities. As I said, I want to see how the prices are. Okay. It has not touched this yet, so that means there's more space for Nifty to go higher. So 21,900 has been reached for, and now I want to see that's not good, right? It just simply turns around. These market conditions are not good at all. 5 minute VI. Okay. Now my trailing stop loss goes right to this breakaway gap. If the price shoots down, I'm going to take away all of it. Okay. I'm going to take away all of it. And we will probably end up with nothing. We'll probably end up with nothing today. That is fine. This is the last VI we have. I wanted the price to go even higher, but this is the last fair value gap. This if the price comes back down, goes right into this area, I wouldn't be holding this up. If we can stay above this, then that's pretty nice. That's a good sign that the markets are still bullish. Now, why precisely this level? That's fine. I'm sure my students can understand it. So still staying in the same, nothing very much. I like to see this VI stay act as support. That's good to me. We exited our partial right on time. That's what we do, guys. We have to take that exit out every time the prices are testing an area of resistance that we know can act as resistance. Okay, so I'm going to stay in this trade now. At this point, it should continue to push up towards this, and maybe if I see, it's taking more than usual. It's taking more than usual. Uh, yep. So then I am going to exit second last here and the last here at the top. That's a surety, right? So let's see if we can continue to spike up from that 5 minute volume imbalance. And again, these are all live executions, live on a live account. That's not even a demo account here. I'm doing this so that you can understand how live executions, they vary a little bit with your demo account, but if you cannot do it on demo, you cannot do it on live. You need to understand that this spike should not scare you. A lot of people are probably entering here and then probably exiting here. Okay, thinking that it can fall down. There are equal lows right here because if the price has taken out this high, it can now fall down. It can, but if it can only fall down here if it touches our red line here. What is that level? 21,873. If the price goes for it, then yes, it can be a problem. But if the price takes support at these VIs, I would definitely want to see the price take out this high right here. That's going to be strong, very strong. So if I check dollar index, the dollar index is about to take that high. So that's a little contrasting here. If the dollar index can somehow push lower, yep, so are at a fair value gap here. So at any given point, the prices can just like turn around like this. So I'll be very careful about that. I'm just removing this so that I don't forget where my stop loss is. This is that breakaway gap. So the fact here is that the momentum can take place at any given point, and I'm just waiting for that, where we can see like huge candlesticks. And the best part is those huge candlesticks may not simply stay. So the recording somehow got stopped once again. We are still in this trade. Now we are only left with 100 quantities. The profits are not too good yet because the prices are not moving. We are experiencing decay. We have booked partials. That's the reason you can see the MTM here. So this trade was started at like at break even, probably 75 rupees loss. Okay. So if you consider just this trade, we are at 1,100 profit yet. This is after booking those partials, and the price has not moved in our favor much. So if you see, there's like only 4 points, sorry, three and a half points move. Okay, 3.5 points move. That's it. So until and unless this goes to 90, I'll probably sit back, right? So I want to see the price now reach here and reach here. So maybe 10, 15 points more on option premium. But the way the prices are taking support here, I don't like it. I mean, like taking resistance here, I don't like it. So it's definitely better for anyone to not be in these conditions, not trade in these conditions. But the fact that the price only moves for two reasons, liquidity and imbalance. Liquidity is right here. The order flow suggests me that we are bullish. So I'm waiting for that spike because I've seen this way too many times. I don't use VWAP, but sorry, I don't use this also, but I don't use VWAP. Okay, so we're pretty far away. If this was right here on the VWAP, we could have expected something big, but that's where these indicators fail. So again, so the order flow is too strong here. The way the prices are taking support at the IFBG top and the way the price is taking support at 5 minute VI and 5 minute VI here, I am too convinced that we should push up. I will only have I'll only have no conviction when the price touches this. That's it. I will be done. Doesn't matter if it gives me profit, break even, or whatever the outcome is. Okay. Now, this is going to be a problem when there is option decay. Okay. But if someone who is trading into synthetic futures, they wouldn't really face problems here because if you look, this trade was executed right here, 1239. Where was the candle at 1239? Was right here in this candle. Okay. So from here till here, that's almost 16 points. So I would have easily booked like more than two partials if I was trading into futures because that's how much 25 points, 28 points. And if my entry was here, I'd probably keep stop loss something like this. So if you see, this trade would have turned into a profitable trade right away. We do not have that edge while we are doing option buying. So you have to be considerate enough of what you are doing in these cases. So you can't really be taking complete losses, all of those things. So again, I am all set to take out my stop loss right here. I'm not going to give away more than this. So in option buying, you'll have to be correct most of the time. And a lot of people are ready to pay the DK amount unnecessarily, but that's how it is. Because to trade futures, you will need a bigger capital. Not everyone can afford it. But imagine the edge that you get right away when you are doing a synthetic future or a futures trade. This right away turns into a profitable trade. So again, I don't like this, the way the prices are just falling down here. So this is going to be my stop loss. And this is exactly the reason I asked my mentee to not trade in, trade into this market, because it's going to mess you up a lot. Even though you can make money out of this, but there's only going to be that one spike. And if you cannot get that one spike, you'll probably try to get into multiple trades, and then it will be all against you. So if you want that, you can go for it. But again, not a market condition I would expect anyone to trade into. I'm waiting for that spike. Again, it's too important for us to see the price stay above this. inversion fair value gap, continue to push up, take out this high. So every time it's probably trying to sell, but I guess there's the major selling that's going to be taking that should take place around here. So I would like to see a spike up. I'm waiting for that spike. It's a long wait, but let's see. So for not even once, we have reached our trailing stop loss. And guys, trust me, most of the time when my trailing stop loss is hit, the trade is definitely going against us for a very long. I mean, like it can just reverse back around. So till the time we are here, it's safe. This is nothing. This is nothing that's going to trouble us. For a lot of people who think that okay, price fell lower, take a shot. Liquidity hunt, price goes up. Okay, liquidity hunt, breaks structure, go short. That's not how it works, guys. These factors, this new week opening gap, the order flow, all of these things are extremely important. You need to understand which fair value gap is acting as support, which fair value gap is acting as inversion fair value gap, which area, right? As I said, IOFED. I don't want to see the price break inside this. That's where you can manage your trades pretty well, pretty good. And that's how it is supposed to be done. Okay. So I'll take out one trade, one exit right there. But if we get a possibility to book, let's see. I don't see again. I want to see the spike to continue. I don't want to just like turn around now. So now this is too much, and I'm going to trail my stop loss to this in this fair value gap high that is acting as a breakaway gap for us. I don't want to see the price reach for it. Now see, when this is a normal market, my partials would have been good. But this is not a normal market today. It's a high resistance market condition. My partials are not good here. And we have to accept that. There's nothing we can do about it. So again, if the price now shoots down, as I said, it's not good. Every time it's taking out this high, it's not acting as it should. Usually it's like a run away, run to the upside very quickly, very fast, and we are a participant of that move without any hesitation. And that's where it's troubling us at this point. So it's definitely not the best condition to be a part of, but we'll watch how this candle closes. And if this candle does not close strong enough, I'll probably prefer to like just get out of this trade. So I've trailed my stop loss once again. Only if there was a possibility to take one more partial, could have. I would have loved to, but because we have too less opportunity now to book a partial, I'm not doing it. So you see, every time it's going up, coming back down, going up, coming back down. And that's a little frustrating mentally. So now, if I take a stop loss hit, it's going to be right at this fair value gap that was supposed to act as a breakaway gap. Now, if the price comes there, fills this, and then goes up, I don't care. I don't care. Now This fair value gap, I would like to see it act as support. So everything is building up. So this is not an area where I would like to exit my trade, but instead I would like to just stay in it, see, observe. If we can continue to hold this, it's going to be a good sign that these lows are being protected and a spike is pending. There is nothing to fear until I see the price hit my trading stop loss. So now if the price shoots down, definitely it's going to take out these lows and fill this fair value gap completely. Then it won't be a breakaway gap. That means there is no momentum anymore, and I don't want to be a participant of this by any means. Let's see if this candle in the last few seconds can shoot up once again. So now on the left, if you see there's a fair value gap. Again, it should act as an inversion fair value gap. But am I going to take a trade there? No, I'm not going to enter anything. I'm going to use this to see if this can act as support so that my order flow is in place. That's important. This is taking a lot of time. Also now if you see, I don't want to see the price test the inversion fair value gap as well. That's it. This is going to be my stop loss. Finally, I wouldn't I wouldn't expect anything lower than that. If the price comes here, it is also going to take out these lows. So I'll just keep it a little clean. Inversion fair value gap is right here. Stop loss is right here. I want to see this fair value gap low. Okay, what's happening? There's a lot of disconnection. Okay. So again, I'm still in that trade. Okay. I've not taken out any partials at this point. I still want to see the price take support at this inversion fair value gap. Okay. So that's a 5 minute fair value gap. See, I wanted to exit that trade right here, but I couldn't get an opportunity and because of see like what happened here. So there was one exit, but things aren't too good, right? That it's going too deep. Usually the price runs up very high without any uh, emotional drama here. And so I'm just going to keep this up. I'm not expecting this fair value gap to go against me. Something that we like now. Okay, so I'm not going to keep more drama. And I'm expecting the prices to now shoot up as it is, pushing higher here. Let it run. This is don't this is not what we want. We want even higher prices. Okay, maybe I'll exit. Okay, let's wait. We probably have something else in the bucket. Uh, my stop loss now trails to this area. All good. I want to see the price now. Give me one more spike to take out the day high. That's going to be a good sign. Just like that, guys. All right, let's take out 50. Oh shit. All right, so I'm out one more and I am going to take out one more. Now, where's this one more going to be? Let's decide. This one more. I don't want to see this void fell, guys. I don't want to see that void fell. I wouldn't like that, to be honest. Let it open up. Let it stay open. Let it stay open. It's going to be good. Okay. It's going to be good. Let it stay open. 3 minutes. We're doing good. I want to see this high get taken out very quickly now. So we have like 50 quantities now. I would like to probably hold for like, if we can get another 10 points, that would be great. But these highs, I am expecting these highs. So last, okay, I don't like it. So the fact that these highs are to be taken out, I'm going to hold it for the complete move. Here now, I'm expecting these highs, so I'm going to hold it for a complete move here. All right, so still waiting for the price to push above this. Let's see if we can get at least above this high. Yes, I do not have anything else to hold on now. So we moved more 5 points. I like that. It went. See, the fact that I couldn't get the best exits today is because of uh, because of a high resistance market condition. But these spikes were definitely something that we could expect. And now we are about to take out that high. I'm going to exit my trade right there. And these highs, if you see, they look very nice even here. So why not wait for them? Super. Let's get it all out, guys. Super nice. So I hope you understood how and what I do. And honestly, I couldn't have done this on a very like, on my with the highest leverage. I cannot record this for you all every single time, but this is what I have. My execution started somewhere here, and yes, as you can see, what the trades are doing right now. My stop loss was right here, and throughout this path, I made sure that this is how the price moved. I made sure everything to be in my favor. Okay, so I will end this up right here. I will end this up right here, and I will share this video on YouTube. अगर आपको अच्छी लगी हो तो go ahead, like this video, comment on it, and let me know if I can do something good for you. Thank you guys.